Welcome everybody to Magnolia on Money,
where we discuss everything financial from the economy to retirement.
This is Magnolia on Money. Welcome back everybody. Today's show is on this really big number. What is this number? It's 124 trillion. So there's a lot of zeros. Kind of gets lost in there, but 124 trillion. What does that mean? What is that?
So whenever we're looking at the big wealth transfer is what we call it, is $124 trillion is set to exchange hands from one generation to the next over the next 25 years.
Yeah. So we look at this and we think, okay, if we know this, so does Congress, and they're already doing things to figure out how do they tax this money to generate income for the country. So we know $124 trillion will be changing hands over the next 25 years, and that's different assets. That could be real estate, it could be bank accounts, IRAs, Roths, whatever it may be. Now we know the Roth accounts are non-taxable, so we do know those are good, and they're so that wouldn't be taxed. But what are the other accounts that we have that could be taxed, and what does that really mean for the government if they could tax this at certain rates? So we spend a lot of our time figuring out how can we make sure that the transfer of assets from our clients to whoever they want the money to go to is very, very tax efficient, and they're not paying more taxes than they have to on those accounts. I mean, the best, I guess the best situation is zero tax. Yeah. But we want to make sure that we're addressing it now because we know that this is coming. We know that they know. When I say they, Congress knows that there's this huge transfer about to happen. So what would happen if we looked at, let's say they could tax this transfer of the next 25 years at 20%. What does that look like? We know it's a little bit low here. 20% of this number, we're at almost $25 trillion of tax revenue if they could tax this on average by 20%. Now, we do know, like I said, that they are looking at ways, always changing the tax laws to change how much they can tax of this transfer. And so if it was 20%, almost $25 trillion of tax revenue.
We feel 20% is kind of on the lower side.
Yep. So 30%, $37 trillion of tax revenue for the government. So although that would help the country pay down its debt, we don't really want it coming from our clients. So we're going to do all we can to make sure that these tax transfers or these account transfers from one generation to the next are very, very efficient. Now, a lot of times we think about tax transfers of maybe just who the beneficiary is or whatever, but we also want to make sure that there is estate plan. So this deals with how the accounts are titled, what kind of tax category they're in, whether they're tax deferred, tax free, but also a big part of this is estate planning. So not just tax planning, but estate planning.
Mm-hmm. Yeah, and one of the things we want to make sure, we're not saying we don't want to pay our fair share of taxes. Nope. We're all for that. But with our clients, we want to make sure we're proactive in their financial planning and their tax planning that goes inside of that financial plan to make sure you're paying your fair share. Okay, we don't want to overgive to the government when it comes to taxes, but we also want to make sure all of this money that we put aside, we want to make sure it gets to the right people that we want it to go to.
That's right. So this is a tax question. This is making sure it's getting to the right people, but being very, very efficient when this transfer happens, when your transfer happens, our transfer happens to whoever our heirs are. We want to be very, very efficient with that and do the best we can. So hope that helps. And as always, y'all have a great week. God bless, and we'll talk to you soon.